The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing there? Welcome back here to the Diagnostic Trading Hour. And we got the market roaring today. We got the S&P is up 21 points. So they were obviously not only happy about yesterday's action with the EU, but the ongoing reports that are coming out right now. And you keep thinking you're at highs, and then you got new highs. We got the Nasdaq up 45. We got the Russell up 20 points. Looking on over at the Dow up 180. So the biggest winner there being the Russell moving at 2%. So leader of the pack on the indices today. Looking on over at gold, it's currently down a few points right now. It's down 3 points from yesterday's settlement price there. And it's been a little bit all over the place, but it's decided to go ahead and settle on down. And then checking out just, everything going on across the markets, we also have silver. It's pretty flat on the day. It's up about 0.5%. And we got copper. It is up 6.5%. So it is not flat on the day. So just a terror move right there. That's just crazy. 6.5% move. And copper is really fun to trade and really scary to trade. If you've ever traded it, you definitely know what I mean. You hop in there, and the thing literally just, it flies. And you make a lot when it moves. Every ticks, you got some good value in there. But, it can move super fast. And, just looking at a chart over here, you can see, just the massive moves. But right here today, this is just this morning. So, just taking off. And got a potential reversal, didn't trigger, didn't fire off, just kept going. And all day long. And busted 3 deviations, went on to 4 deviation move. And just a massive, massive move right there in the copper market. And let's see, we got corn. Corn right now, or we got corn. Corn's up $3. So nothing majorly fantastic there. But we do have soybeans moving up 26 points. So nearly a 2% rise on the day. Euro dollar's up 46 pips. Pound dollar is up 32 pips. The Aussie dollar is making a decent little move today, so it's got 65 pips. And Euro yen up $1.87. Pound yen up $1.91. And then looking over at USD CAD down a mere 21 pips. US yen up $1.14, and the US franc is now only down 4. Of course, that is from settlement price. It doesn't tell you the intraday story of how the market is, moving throughout the day. So, of course, you can see a flat market when you're looking at just the net change, but that doesn't mean it's been a quiet market, because it could have flown down, flown up, and come on back around. And so with that, let's go ahead and scroll through and check out some of these markets, what they've been doing, and how they've been moving. So as we like to do each and every day, we check out the basically the deviation levels. And so we'll go ahead and hop on over to the S&P, show that to you. Tommy and I were looking over at the S&P this morning and looking at a potential short if it actually decided to come down and break. But so far, no major dice, no volume, no nothing, no commitment on that reversal. And I got stopped out of my long up here, not too shabby. So right up here, we're on 1611.5, and it's just been choppy ever since. And I use a couple different methods to trail stops. I talked about, one of those, like RSI divergences, talked about that a little bit earlier this week. And what I'll do is, you can do this really on almost any time frame. But if we go in, just throw on an RSI, and I'll pull that up, let you see how that looks, how that works. And so putting that on the chart right here, and almost it's difficult to see it because it all moves so fast. But one of the methods I like to use is I'll go in here, and I'll probably just have to make the RSI bigger so you can actually see the divergence, because it's so small. But it's there. But we'll see right here. Okay, so we got new high. okay? What I like to do is when I get from peak to peak, like that right there, or, we got it again, so we got to pull back and then another peak. So right there, and then I'll also look from here to here. So those are the 3 points where I'm going to be looking for divergence. And what I'll do is I don't wait from peak to peak on the RSI. Okay? And this is for a trailing stop method. This is not for a reversal method. But I go right there, and so that same point, that lets me know time to trail my stop. Okay? And because what's happening is, if you notice, we got this one is pointing up, okay, in the angle. We got this one down here is pointing down. So when I see that divergence, could mean the market's going to pull back, may or may not mean it. That alone is definitely not going to get me to go the other direction. But I'll go in here and go long, go short, and that allows me to do that. So, right here, if I look at this, what I can see is I can go, okay, well, what if I go from point to point on this one? So I go in and look at it, and we didn't have RSI divergence, so I don't have a trailing stop yet on that one right there. And then I go, okay, well, what about the next one? So right there, go in, get that same plot point, take it down to that same price level right there, and look at that. There we go. We got another RSI divergence, so I can trail my stop again. So very simple, just peak to peak, okay? And then plot from the same points on the price level that you plot over here on the RSI. So RSI don't look for the peaks, RSI look for the price level. And by doing that, it made a higher high, this made a lower high, and it can keep diverging. So that doesn't mean, go the other way. It can be a nice confirmation if you're looking at it. And let's see here. What I'm looking at over here is next thing I do. So that's one of my methods. The next thing I'm going to do is I'm going to look at the deviation levels, looking at bars closing above them. And so we can go in, now that we got our RSI divergences all taken care of, you can see those very clearly where they took place. Get this volume shrunk down for you. So right there. Okay, so we see this bar closed above the deviation. So not only did I have an RSI divergence, I also had a close above a deviation. So that's awesome. So right there, boom, that's 2 reasons to tighten my stop. If it does get hit, it's probably either going to go choppy or go the other way. So I don't want to keep being long and, right there. Now, I mean, if it comes down and pulls back, gives me another entry, I could look at potentially taking it. But in this case, it doesn't come back. Well, what happens again? So we're going on, go, boom, at the exact same time. It worked out like that right there. And so there's, there's a lot of ways you can do, trailing stops. These are just one of the 7 triggers that I like to use. So it's flying on up here, closes above it. So I got that, and I got RSI divergence, so doubly so, the reason to trail my stop. Now, here's a third technique I like to use, okay? And this helps me avoid a lot of bad trades. You see this dip and then peak right there? Okay, so we got a high there of 1614.25 and a high of 1614.25. The exact same peak, failed to break the high. Okay, so what do I do when that happens? Well, I have the same thing going on. I mean, you can actually see a stop right there. But I put a line right here, and I'm going to put my stop 5 ticks below it. So whatever, if I go, okay, well, what's the low on this bar? Then I'll see the low is 1612.5. So I'm going to put my stop at 1611.25 right there. So I have my stop in, and, we're looking along the way to see, hey, is it going to reverse here? Is it going to reverse here? And again, I want to see more than just it, hit the price, okay? But that 1611.25 gives me an area right there, and we expected it actually to pull back. We were talking about this on the show this morning on the Bull Bear Binary Hour. You got that volume spike right there. See that? So it spikes up and then takes off, and we expect it to pull back. That's a magnet price. That high of that bar becomes the magnet price. And we actually do expect it to pull back to this level. Now, whether or not it's going to keep going, that's always the game, right? But I do expect that. So I get a trailing stop. I'm expecting a pullback to this price. It comes down, it hits it. I'm not upset, I'm out. Okay? And another thing is I won't take another entry long when these two bars right here, from here to here, are equal, or if it's actually within 2 ticks of that high and it doesn't break it. No more entries until I get either a reversal formation or until after it breaks and makes a new high. Then I could wait on a pullback again to have another potential long entry. So, I got a long entry right down here. And then I have a long entry right here. Okay? And then I have a long entry right here. So that one basically gets stopped out at break even. This one, I was looking to get a long entry, but I never got it. So I was waiting for a couple tick breakout here. Never got that couple tick breakout. Since I didn't get it, no new entry. This trade out again at break even. So from this we got in, got out. And then these trades obviously did very well. So you have the big move right there, right off the news. So you got the pullback right into it. Takes off. We trail our stop. We trail our stop. We trail our stop. Out. And then right here, we go in. Got the same thing going on. We get a pullback. I got to put the other arrow there. So that one right there. So on this one right here, we go in. Get the entry. Trail the stop. Trail the stop. Out. And like I said, this one right here is break even. So you got basically 2 nice trades. Really nice trades. So also, we're at a deviation level. We're at a point where we expect exhaustion. And so we're closing above. We're getting RSI divergences. We're failing to make new highs. We had a pullback to the high volume reversal, but we had it on low volume, so there was no commitment to go short. So, but that simple combination right there is, how I look at the markets. If I hop on over, and I literally have, like I said, I have 3 filters for entry, and I have 7 triggers for my stop losses. That's a couple of them, and maybe got basically the exact same thing going on here, right? So as we go in, you can go and you can pull up your RSI divergence to the same thing. So you can see they're almost at the exact same point as they were there on the S&P. We draw it out, pull it on over. So we made a high there, so we got a tighten stop. Put it right here. And this thing, you talk about diverging. So right there, the last high peak. Got that going on. So we're able to go in here and do the RSI divergence. We're able to trail our stop 5 ticks below that. Do the RSI divergence. We're able to trail our stop right, basically 5 ticks here below this. And that gives us a really nice stop. Plus we had, other things that happened, such as we closed above the deviation level. So in between that, we trailed our stop here, and we trailed our stop here. So all along the way. And anyways, we'll go through and we'll review a few more markets for you when we get back from this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we got these set on up here. Let's go ahead and check out. We just went through the NASDAQ with the long entries right there. Most of the indices are pretty much going to look obviously the same. Deviation levels may vary between them, but I mean, going from one chart to the next, you're basically starting to see the same thing over and over again. And so right there, you know, I said same thing. And this makes, let's actually zoom in on this. This will be a good little learning potential opportunity here. One of the things that sometimes confuses people about the deviations, I go over the 10-minute rule on how to use them. And again, you get access to the deviation levels inside the diagnostic box spread scanner. It comes with the deviation levels for futures, for forex, tutorials on Nadex, spreads, binaries. We have some people that subscribe just for the deviations themselves. But if you go in here and check it out, what you'll see is this bar closed above. So, you know, if we're going in here, no close above, boom, closes above. So when that happens, that's when I'm moving my stop to, you know, let's say 5 ticks below. All right, so if we have a low right there of 29.39.75, then I'm going to take it down here to 29.37, you know, say 50. And 29.38.50. There we go. So that seemed a little far. And then it closes on. If it closes on or under, I can retighten the stop. Okay? So now I can actually tighten it to... I can't tighten it just by because it closes under. But if it closes on or under, basically it resets. As long as it didn't stop me out, if it closes above again. So let me review. Closes above, tighten stop. closes at or under, look to tighten stop again if it closes above again. So this bar closes above. And, okay, so now I can tighten my stop even further. And if I go right over here, 29.42.50, 29.41.50, 29.41.25. So I tighten that one on up. And there. Well, then we close under again. And then we close above. Okay. So this one here, 29.43. Well, now I can move it up to 29.41.75. So not much of a difference, obviously, but still, that's another tick in your pocket, right? And that's not a bad thing. So we're moving it on up there, and now it comes down. We get a low of what? 29.42. And we had it at 29.41.75. So we actually did not get hit yet. Right here. Low is 29. See if we can get it. 41.75 has not broken. Oh, this thing just doesn't look right. I don't know why it's just. I guess it's just a zoom. But maybe if I back it out a little bit. Yeah, it's just the zoom. So, anyways, but we had the stop at 29.41.75, but the low of this bar is 29.41.75. So it did actually, it touched it, but it did not break our stop level. And so 29.41.75, we're still in. Closes, obviously, below. Closes back above again. Okay? So is that, now here's the issue. You can't move a stop backwards. All right? So we cannot move 5 ticks below this. What would that be? Well, that's 29.42.25. That put us at 29.41 and put our stop down here. We can't move it backwards. We can only move it in your direction. And so we can see it's going down there, closing back up. Now this one closes up, and that's 29.42.75, so it puts us at 29.41.50. So that actually does put us a little bit higher. And so right over here, 29.41.50. Okay, one tick higher. What's our low? 29.42. 29.42. So close below it, close back above it. Can't really move it on this one because, again, it's a low or high. It actually forces our stop to come down when we're only going to move our stop up. And so we're going over here, and we're still in the trade. So right now, that's where our stop is on the Russell. So right there, at that point, when it hits it, we're expecting chop or reversal. So we're going into the end of the day. Could easily be an end of the day trade to go short. If you were going to go short, where would you expect it to go short to? Okay. So one, you'd have a stop just above the high. So let's say it breaks this level and you're like, I've been waiting all day for this thing to drop. And so you're going to go, short over here, okay? When it drops below this level and actually breaks it, okay? And then you got to manage your risk, or, better yet, trade Nadex, which easily manages your risk. So right there. And then what do we expect it to go to? Well, we're going to talk about when we come back. We're talking about these high volume bars and how to use those as expectations for where the price will move next, along with the deviation levels. Stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just going through and just sort of showing you the different methods and trailing stops, and of course, along with all this, we got our RSI divergence kicking in as well. But I want to talk about volume. So what if you think there is a reversal, underway? And, like I said, we had the RSI. We moved stops all the way up. We got to stop right there, But, we had multiple stops that got triggered at the exact same time. So with all those stops being triggered, what do you do? And again, we're not, we got one more right there, but it doesn't matter. We're already all the way tightened up by the 10-minute deviation. So you think it's going down. Where is it going? The first target you're going to have is going to be right here. Well, that doesn't really do us a lot of good. Okay, that's a few points. Well, a few points on the Russell isn't bad. But, that's your first target. Okay, so right here, if you decided to do just an end-of-day sell-off, take profits, shorts covering, whatever, what would be the next expectation in price? You basically have 2 levels right here. One is you have this high volume bar area right here. So over here, we can go and we can see that would be the next level. So 27, say on the NASDAQ. But we also can, the simple, reality of just support resistance happening and, having a deviation level, a 1 full deviation level. So these deviation levels will often act as support and resistance. So, putting together the high volume bar with the deviation level, with this area of oscillation that happened before it made that last leg, all those things combined, I'd be targeting right around 29.30 as sort of my safety point where I'd want to be tightening my stops on the way. And that gives you a nice solid 12 points on about an 8-point risk. And that's if you're taking 8 points of risk. If you're trading Nadex, that's obviously can be a whole lot different. So, there's a lot of different ways to take advantage of this. But I just want to show you just some of the, a little bit different. You can use this on futures, forex, stocks, ETFs. What I'm teaching you right now as far as, how to do RSI, using volume, putting the pieces together. And then we are actually in the process right now of programming the deviations to work on stocks and ETFs and 40 different futures markets. And I hope to have that done within the next 4 weeks. So pretty excited about it. So hopping on down here for, say, corn. Okay. So we can look at corn, see what it did. We know it was a pretty flat market. And, just look at the volume bars and everything else on it. So obviously corn is, pretty much done for the day. They're, the exchange, the pit's closed. So you got these volume bars, but you can see what's this volume bar right here on this up move. So on a move back up, I'm going to expect it to come up to here. Okay. So if it pulls down and takes off, and then on a move down, look at we got this volume bar right here. So I'm going to look at this level for a move down, and then I also have another pretty substantially higher volume bar for corn going on. So I can go right over here to this low right here. So your target levels, okay, you should be looking for, depending upon if you're, bullish or bearish. So at the moment, I have a hesitation on continuing to go long on corn. If I was, still trading this right now, remember that rule I talked about earlier? I don't want to take other entries until I have a new breakout or reversal. Well, look at that. I mean, it did not make that new high, so I would not necessarily be just all like dying to get in there and go long again. If I was, then that's of course where I'd be looking to take profit. Not because that was the high of the day, because that was the high volume bar, which also happened to be the high of the day. And then now if you decide to, take this short, okay, you think boom, boom, done, topped, going back down, then you can go here and you can target 661, and you can go a little bit further there and you can target 659 as well as two different profit targets. And so if you were doing this earlier in the day, obviously it's a little late being a Friday, but if you're doing this strategy and you were, say, doing straddles on the spreads on Nadex or strangles on the binaries on Nadex, that would help you get your profit targets, put them together. So using the simple 10-minute chart with volume on it, very, very helpful. And then, of course, you got RSI divergence and everything else going on, too. So there's just a lot of pieces you can put together. And even without a deviation level being hit, like I said, check this out. So we go over here. We have this high to this low right here. This pull down runs on up there to this peak right here. So that's where you could obviously, if you're long, you could be trailing a stop at that point. And then you have another, you got some smaller peaks in between that you could take advantage of. So like there's a peak right there that you could take advantage of. So you could move it and go here and watch this. Almost every time you're going to have one of these peaks, unless it's just a really big drawdown from peak to valley there, you're going to have that RSI. So that gives you just another point where you can trail up that stop. So again, it's a very, very simple method. Doesn't take that long to master, and gives you a very nice objective point that you got to have room to let your profits run. And so many traders take their profits way too fast. Okay. And then going on over here, and let's see, got this right there, and going on over here, we got these pieces. Then you can see this right here, and got another RSI, boom. We had closes above deviations along the way. And over here at soybeans, we got to close above. Then we had to close, below. And then we had another close above, so we tightened it again. And then just trying to see like every point, just using these simple rules I taught you today. Or you can do it again and again. So right here, this point, that's a very small slight divergence right there. Nevertheless, tighten it on up. So right there. So just along these ways, see how we're giving ourselves room to let our profits run. And that's hard to do. And so that's why I like this, because it's a very objective trigger method that I can take advantage of. Let's see here. The next thing we got, all these pieces put together. We'll go ahead and that knocks out our ags. We can check out gold. So gold moving in and shaking today. Choppy as all get out. One thing let's just say that I've learned about gold. I love trading gold. I sort of like to avoid gold when major big announcements are coming out. Interest rates on the Fed, interest rates on the ECB, non-farm payroll. Either I'm straddling it or avoiding it, and I mean, I haven't really got killed on it. It's just been like this futile effort. Like you go in and you make some, you lose some, you make some, you lose some, and so a lot of times I've looked at avoiding it. I mean, you got to figure out what your forte is. But either way, I mean, you can look at how using the same method would help you. It's just notice how this thing flies up, comes down, flies back down, comes back up. It's like nothing happened, which is sort of funny to say that, nothing happened. But, I had a trade I put on earlier this week and on the show. I wonder if I can find that trade. Maybe I'll do that in between the break. But I put on a butterfly. So saying, between this point and this point, I expect this to happen. And I want to say it was on, Wednesday was that we did that trade? So yes, Wednesday, like right there near the end of the day. So on the 1st over here. And we went in, we put the trade on. And I said, I think the market can end somewhere around this point, like between 1568 and 1543. I'll go up and pull it back up. And so I did a very simple binary butterfly. And it's collected premium. And it's like, I think it's going to go nuts, and then it's going to be nothing. And at the end of the day, even as insane as these moves are, I mean, 30 points up, 30 points down, that's almost nothing for gold lately. And it did. It popped up. It went against me. I took profit on the one I bought, came back down, and with the one I sold, working out rather nicely there. And I'm just going to see, like I said, I'll try to pull that up in between the breaks, see if I can find that position left there. I just I leave them alone, let them do their thing, walk away, enjoy it, and set it and forget it. And so we'll go on in. What positions do I have left in here from the show? Because I like to keep all those together. And one more minute. Sometimes I'll be signed in and I'm like, where's that tab? And then I don't realize I just signed in twice. Okay, yeah, there we go. So we can go over here and let's see if they've settled out, if it'll show it to me. Yep. So basically what I did is I went in there, I bought the 1468s, and had a nice little payout there, 970 on that trade, and that was when it flew up. So it flew up in my favor. And let's see here, if I can find a couple more of these. This thing will cooperate and go a little faster for me for being on air. It's a lot easier. Maybe I can just go to my order history and show a bunch of orders. So we'll do that. That's taking just way too long. So order history, right down here, we go in, got our gold contract, 1468.5, and that's the ones we originally sold, then we bought back. And then, so what I was saying was, when I put the trade in originally, that I thought it was going to expire basically above 1428 and below 1468.5 at 1:30 today, Friday. And as you can see, obviously that happened. It expired in between those two ranges. And I had a 1-to-1 premium trade on, weekly trade, simple weekly trade, 1-to-1 risk-reward ratio. And for every risk of $50 I'm risking, I think I was risking $49 to make $51. If it stayed in between, not just stayed in between, okay, because it could go out of it all it wanted to. I didn't care that it went out of it. I just cared that it came back in between 1468 and 1428 by 1:30 today. So obviously that happened, and trade settled out, trades paid out, and I got to show you over there. The 1468 was the one I was waiting on, because that was the that was the one that was going to be a little rough if it didn't work out, and it did. But and it shows the payout right there on that. Not too bad, but $970 on a few of those, and then more came through as it was going on. But and also had like a long and a short. I did another binary butterfly yesterday on the U.S. franc, and that one worked out pretty nicely. So I was able to go in and put on a $50 risk, $50 reward right around the end of the day, and both sides having full payout on those trades. And it's pretty sweet. I love doing premium collection, but I hated the bad risk reward ratio. I love the probability, but I hated the bad risk reward. And so with these butterflies that I do, I've really learned to re-embrace my non-directional neutral trading side of that trading personality thing we all got going on. Now, what about silver and copper? Let's go get copper. Copper was insane. And it can get a little difficult to manage your profits when it moves that far. We're talking like four deviations moves. Like it's not really on the bell curve anymore. It's like on the line of the bell at the bottom, where it goes from like one side to the other. You can't even find it. So looking right over here, using this simple, just going on the RSI method. Okay, we're talking about. So I'll delete all these drawings. And there we go. Yeah, get all of them. And there's another way to delete them. Just want to get rid of these lines. I don't know why this thing carries over one drawing to another chart. But anyway, so each one of these peaks as it's going. So we'll start here all the way up at 3 dB, because you're talking about that's when it gets tough to hold on. Okay, so we got peak, we got another peak, we got dip and peak, we got another dip and another peak, we got another dip and another peak, and we got another dip, and we got, by the way, another peak right over here. So, and they're going all the way. So, but there's another one right here. I mean, you don't get a prettier trend than that right there. And just talk about trading with the trend. Trend is your friend right there. And I'm trying to draw all these. There's so many of them. So along the way, with all these RSI divergences, you just go from peak to peak. Trail your stop. Okay? And you just keep doing it every time. So right here. That one flew up. You didn't get a divergence. No trail. Okay? So right here, got another peak. It is flying so fast. No divergence. No trail. Keep going. Okay, got another peak right there. And no divergence, no trail on that one. I mean, it's moving. So we're going to go down here. Now what starts happening? Now we definitely have divergence. Okay, so now we're trailing. We go again. And this is also, by the way, why you don't short RSI divergence. So we go from here to here, because it can diverge a long way. Or you don't reverse, I guess, RSI divergence, not short. So peak to peak, no divergence. We go over here, peak to peak, right there, got divergence, so we can tighten it again. And we go over here, just trying to track every one of these. And peak right there. And so we were able to trail our stop literally each time, trailing stop. And by the way, we have the 10-minute deviation method kicking in. And then we got another trailing stop, and then we got a 10-minute deviation kicking in. We got a trailing stop, 10-minute deviation kicking in, and we got a trailing stop, and we got a trailing stop right there. Letting you literally ride the market all the way up objectively. Very simple.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.